Bitcoin grinds out its lows in preparation of a further descent into the bowels of El Diablo, while altcoins take the opportunity to continue on and many of their continuation moon missions. Have you entered into your altcoin spreads yet? To protect against the possibility of being fully weighted in Bitcoin, we'll take a look at potential opportunities and trade setups in today's exciting episode of Breaking Bitcoin. Welcome back to Breaking Bitcoin, recorded live here in the studio. Today is Thursday, October 24th, 2019. Foul year of our Lord. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across to YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe. If you're on the YouTube channel, make sure to hit that notification bell because we are live here every single day and YouTube will not shut us down. And if you're over there on Twitch or DLive, consider giving us a follow. We've got a fantastic show for you guys today. We're going to break down Bitcoin's price movement or lack thereof and its full risk set and the full risk short setup that we have, that I have personally as a trader and that I have suggested that we've done as the group. What we also are going to talk about is altcoin setups and altcoin trades. I think that right now is a pretty exciting time, and I haven't really changed my tune about looking at altcoin trades. We're also going to talk a little bit about the repo market, and we're going to talk about some fundamentals, guys, as well as take your user-submitted chart requests. We're also going to look at Forex, time willing, and maybe some precious metals. Anyways, guys, hopefully you're doing absolutely fantastic. Today's episode is brought to you by the Premium Trading Group. Whether your goal as a trader is to be a full-time professional, potentially get funded, trade your own money, trade other people's money, whether your goal is to earn passive income on the side, or whether you just want to take control of your finances because you're not aware, you're not trusting of what the government might potentially make illegal tomorrow, and you want to protect your own financial freedom, head over to the link in the description or at the top of the screen, premium.krakencryptocurrency.com, and join us on this journey to consistently profitable trading. Guys, I want to thank this month's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. And with that being said, let's go give away some crypto and let's break right into the live scene, guys. All right, so here we are on the live scene. Yes, phone. I do know that I'm live. Here we are on the live scene. Let's go over to the YouTube random comment picker. We're going to choose a video. Now, embarrassingly, I am going to have to go grab the URL, as I am wont to do. And yesterday's video was, is this the Bitcoin doomsday signal? Actually, you know what? I really enjoyed yesterday's show, so make sure you guys go check that out. We talked about a whole lot. And honestly, if you don't watch anything, watch the second half of yesterday's video, the last 30 minutes. We really went into something that's very near and dear to my heart. We talked about the fundamental battle that will take place between decentralized currency and regular fiat currency, and really the only option, that really being the only end game. And I mean, that's a topic that's very near and dear to my heart. So make sure you guys go check that video out. Randomly picking a winner. And it was Yasudas Sebastian. And he says, great analysis with the two loving, I don't know if that's V for victory. Hell yeah, man. V for victory indeed. Yasudas, please hit me up in the Discord at JustinWise5696 and I will tip you some crypto. All right, on to the live scene. I do have ELF pulled up over here, and although I am in an active ELF trade, that's not what we're here to talk about. Let's go look at ByBit. Actually, you know what? Let's pull up the Bitstamp chart, and everything does look pretty nice over there. All right, so we'll pull up the Bitstamp chart as we are wont to do. Let me also get the chat pulled up, and let me say hello to Blockchain Gains. First in, as usual, Ferguson, Paul, Bob the Builder. What's up, my friend? Lefty, we got Randall Krotz. I haven't seen here for you in a little bit. Let's see here. P&W Flipper, MT Coiner. We've got Thomas, Steve, AGW, Wendy as always, Gui, Dark Rico, Nittensoki, Neo Gaming, Ron Legato, Tim A. Good to see all you guys. Happy to see you guys. Good to see you. All right. Now, where are we at as far as, okay, so just For those of you who are new to the channel, who don't know how we do things here, the way that we trade is this is a technical indicator-based strategy. We are objective. We only trade off of objective if this, then that strategies. We take a probabilistic and statistic approach to the market. You will never hear me say on any single trade, I'm all in, I'm 100%. The way that we win, the way that we are consistently profitable traders is by having a statistical edge over time. It is absolutely possible to have a long series of losing trades and then several winning trades and come out net positive. We always focus on looking at the actual P&L in dollar amounts. That's our focus. That's our bias and centricity on this channel and in the trading group as well. And we focus on back testing and deriving a statistical edge. That's what we do. We are, if this, then that, objective trading signals based traders. We don't generally utilize support and resistance. We don't generally look at chart patterns. We don't generally look at anything other than the market, current price, and technical indicators. We are also biased to trade on higher time frames as well, although we will sometimes descend to lower time frames. So if you are new here and you're confused by anything you see, hop in the Discord at discord.krakencryptocurrency.com. Make sure to check back a few more episodes. Subscribe if you haven't, because we are here every single day, except for the weekends now, because we have been doing some more projects on the side. And that's about it. And check out some of our indicators on TradingView, tv.krakencryptocurrency.com. All the links in the description down below. So let's get right on with it. Now, here we are on the daily time frame for Bitcoin. Now, something that's really interesting, and I will delve a little bit into the realm of subjectivity here. And of course, just a refresher, the strategy that we are using on the chart today is going to be the 30-period Donchian, Minx, one of our proprietary indicators, Commodity Channel Index, which is not one of our proprietary indicators, of course. It's one of the most common indicators out there. Wada Explosion, which is one of our indicators, or at least a version. I'm not responsible for the original source code. I am responsible for my modifications. You guys cannot see the source code, but you can utilize the indicator on your chart at tv.krakencryptocurrency.com. We also have Heikinashi color change on the chart. And this is the one of the better scripts. It's a very simple script. I've actually written this myself many times, but I am using somebody else's for the purposes of this show. Potentially, if you guys are interested, I'll write my own version just so that we can have a CC version, and I'll add some neat tools, trips, and ticks, which is kind of my thing. But anywho, now, obviously, we know this, guys, and let's just start off by stating the obvious. Long consolidation period for Bitcoin for about 3 months, pretty volatile move down, and then a long consolidation period, I'm going to say for nearly a month, and then we're having a pretty violent stab down right now. Now, we are in this area, just as we were in this area back at 8,000 in this previous consolidation range, where a lot of people are attempting to reversal counter trade this. And here is the reality, and I want to state this very, very emphatically. That is not how we trade. That's never how I've traded Bitcoin. And I also want to clarify that, because I want to split my approach to Bitcoin into two categories. There is trading, which is what I rely on personally for my active income every month. And then there is investment, which is what I utilize to live a life of financial freedom and accrue a portfolio of cryptocurrencies, stocks, REITs, precious metals, and some foreign currencies, as well as a few other things that I want to pass on to my children. I'm trying to grow generational wealth. That is my approach. I also want to live a life of financial freedom, and I've been on this journey for quite a while. And it's not easy. It's not easy, but it is rewarding. I don't have to answer to anybody. I work for myself, and it is a pretty rewarding lifestyle. It does take some work, does take some patience, but if you juxtapose that. You know, I never thought the idea of working for somebody else, earning them money for 45 years of my life, and then retiring and enjoying what I wanted to do over maybe the next 20 years. Who knows? Maybe life expectancy will be greater, but I never thought that was a good idea. Anyways, now we did have a pretty big volatile move to the downside. Now, typically, I'm a little risk averse to be entering into a full risk short setup after a big move to the downside like that, because we will often see a bounce, a reactionary movement to the upside. But the reality is this: like we have breached some pretty significant levels on higher time frames. The weekly, let's start off by going to the weekly. Maybe that'll be a good exposure. We are below the weekly 30-period Donchian. What we're going to do here is we're going to change our baseline to a 13-period exponential moving average. We're also below the 13-period exponential moving average. If we go to the 21 on the weekly, we're below the 21-period moving average. And if we go to the 55, we are looking to close this weekly below the 55. And that is really my threshold. As I've said many, many times, The true confirmation, although you get early trading signals, the true confirmation for me anyways of market cycle comes on the weekly time frame. We had confirmation of a bullish market when the 13 EMA crossed over the 55 exponential moving average, but the earliest signal was actually price crossing and closing above the 55 exponential moving average. On the weekly time frame, you're in a completely different market structure, and you can see here that when price crossed and closed above the weekly 55 exponential moving average, it was absolutely bullish. And although the weekly 13 was a better indication of the bearish market, there was quite a bit of chop. Bitcoin is quite volatile, so this is not a regular market structure. Bitcoin went from this massive run up, and of course, as markets are prone to do, they collapse much faster than they build up, and Bitcoin just made a massive nosedive all the way down to 6,000 over the course of about 2 months. It was very, very rapid. And there was extremely weak bounces. There was no bullish opportunity. Most of the people that I know who are actively trading right now or who have been actively trading for the last year or so, they made a lot of money on the run up, but a lot of them made a lot of money on the way down as well, because both of these market structures presented amazing opportunities. Now, and then again, we close above the weekly 55 here. And it's not as simple as that. You can't just watch for those moving average crossovers. But when they occur, or excuse me, not moving average crossovers, but price crossing and closing above these moving averages. But when they occur, they do fundamentally mean something because they don't happen every day. They're pretty fundamental events, right? You can even see here when Bitcoin closes below the 55 for the very first time, it does give you a little bit of chop. It does give you a little bit of chop, but if you would have added the caveat in that you were going to remain bearish until you saw a higher high, you would have never taken a long following whatever long you would have taken to the run up to the all-time high of Bitcoin's price. Now, there were opportunities. I'm on the weekly. There, of course, were opportunities on the daily time frame. If we go back and look at that same area, of course, there were quite a few potential longs in this area. A lot of potential bounces off of support that we had. So there were longs, and we did take longs. But I just want to, for those who are newer or for those who are more risk averse, zooming out and looking at those higher time frames and just looking where price is in relation to your moving averages can be one of the most funnel things. And it's often one of those things that, people become more experienced with trading, and they develop this kind of complex like, well, I'm so good at trading that I don't have to look at that basic stuff anymore. And then they end up like losing trades. And if they would have just like looked at the basic stuff, because they're not better than the basic information, like it's not like the basic information doesn't apply to them anymore. Now you can naturally replace things. You can naturally, and I support and promote you constantly looking to replace the components of your technical strategy or the methods of your analysis with better tools and greater understanding. I'm always a proponent of that, but never think that you're better than something that works, right? Like and that's what's funny about trading. Like people, this is a particular type of person, but they'll see like me or they'll see other traders doing like fancy stuff, right? What they think is fancy. And then they'll like jump into doing that fancy stuff, and they will actively leave a system that worked okay to a system that they're not very good at. And it's unfortunate to see. But always trade with what works. Always back test for consistent results and then carry that forward into the future. So anyways, we're under all of those moving averages that I consider important on the weekly and of course on the daily as well, which puts us in a very different market structure, right? Now, are there going to be bounces to the upside? Yes, there's going to be bounces to the upside. There will be tradable bounces to the upside. But as we sit right now, I think that the dominant direction is to the downside. And again, is it possible that Bitcoin does end up grabbing liquidity here in a massive way and reversing in a significant fashion and we are all-time high bound? Yes, guys, anything can happen in the market. But right now, as we've been for quite a while, the dominant trend is to the downside. The dominant direction is to the downside. And until we see real clear signs of a bullish trend flip, which we're far away from seeing, the trade is to the downside. The trade is to the downside. And I think a lot of people longing this are going to get punished. I think a lot of people that are buying the dip and have been dollar cost averaging down for a trading purpose are going to incur some pain. Now, I'm going to be dollar cost averaging Bitcoin for investment purposes. I'm going to be purchasing Bitcoin at spot price every single Monday. The first thing, the first thing when I wake up. That is, I call it Money Monday. That's how I do things. Again, because we are in bearish territory. And again, when you're looking for an investment, you dollar cost average down. But when you're looking to be a trader, that is not what you want to do, because you're not trying to hold trades and restrict your capital for months and months and months and months on end. So it's just not what you want to be doing. So anyways, on the daily, What happened yesterday is something that hasn't happened with this strategy for a while. And of course, if your strategy is signaling a different signal or at a different time, then I want you, as I've said many times, I don't want you to come on the stream and assume that I'm always right. I want you to take the lessons that I try to convey here, and I want you to go back and apply that to your own strategy. But if your strategy is telling you to do something different here, then I want you to default to your strategy, because that is what you've put the work into. I haven't put the work into your strategy that you have, and you haven't put the work into my strategy that I have. But as we can see here, yesterday we did get a full risk short signal. We have rising volatility. We continue to have rising volatility. We have a confirmed recross under of the smoothed minks. We have a confirmed recross under of commodity channel index. It is below the zero line. We are below the baseline, and we have bearish Heikin-Ashi trend. So everything is here for a bearish setup, and we also got the initiation yesterday. Now, do I really like entering into a directional trade after a big movement in that direction? I really don't. But at the same time, you don't discount the indicators. Now, is it possible that we do get a little bit of a rise here and then we end up trend flipping and get faked out a little bit? That would hurt. And, something that I want to convey too as well to you guys is that, over the last few months, I have returned double digits on my equity, right? Consistently. And over the last month or so, I haven't had the best go of it. For October, I'm roughly at break even for the month of October, right? I've had some good wins, I've had some choppy losses, and that's okay. Roughly for the last 20 or 30 days or so, I've roughly been a break even trader, which still is better than the large majority of traders out there. Again, remember, most traders are consistently losing money. And so I was talking with one of my friends and a student last night, and he was like, "Yeah, man, just how do you feel about that? Do you have a certain subjective feeling about your trading prowess lately over the last 20 or 30 days?" And no, I don't, because I can't. You never want to subjectively. And in fact, one of the traders that I respect the most on crypto Twitter just posted that his last 7 of 8 trades have been losers, and he was honest about it. He was upfront about it, and that individual has made millions of dollars trading cryptocurrency. So you don't take a system that performs consistently well for you and allow anything. You don't allow any short-term subjectivity to throw you off your square. You continue to take trades within your wheelhouse. Like this trade right here, for example, was a good example. We were in a short. We knew the direction was to the downside. The system told us to get out over here, so we got out. And then what happened immediately after that? We got a down candle, did not get a signal, and then price fell out the bottom. It would have been great to be in that full risk short. Of course, I was, thanks to the system, in the Ethereum short, made quite a bit of money on that. And am still in quite a good level of profit right now. So I am still in a full risk short on Ethereum, and I am now in a full risk short on Bitcoin because that's exactly what was signaled for on the daily close yesterday. In profit right now, very small profit. Price has not moved as much as I want, but ultimately I am looking for my long-term target down to the $6,400-$6,300 area. I don't have any lower price targets than that at this point in time, and there are stops on the way about mid-range around 7,000, around 6,700, and then all the way down to 6,300, 6,400, and that's where I'm going to be looking for price to potentially put in a bottom. Now, if we go lower than that, we need to start talking about, of course, lower price targets like 4,400 or 3,400. I don't really feel that that's in the cards. We haven't had the weekly moving average exponential cross under yet, and that is generally what heralds a real sharp dive down. That's why I say so the weekly moving average crossover, we didn't have a long period of upside after that, right? But what we did experience after that was punctuated equilibrium to the upside. Punctuated equilibrium, I'm perhaps using it out of context because punctuated equilibrium to me, the way I understand it, is an evolutionary theory where evolution does not happen very slowly over millions of years. There's millions of years of basically things staying the same, and then all of a sudden there is a massive spike in diversification, a massive spike in genetic modification, because that's one of the current theories, and that's what makes sense the most to me. This is an established theory in the school of evolution, and it seems to me one of the few logical explanations for things like the Cambrian explosion, where we have nothing in the fossil record, and then all of a sudden we just have millions and millions of different types of life forms. So, anyways. So that's, it seems to make sense to me. So, again, this just kind of, I utilize that term as kind of a catch-all for anything where you have low periods of basically volatility as I'm applying it to the market, and then all of a sudden, rapidity. So you will notice that if you go back and look at the weekly chart, when you got that 1355 moving average crossover, what happened? Price shot up like a skyrocket, right? price shot up like a rocket, excuse me. And that generally is exactly what happens to the downside, right? Once you get that moving average crossover, you tend to move into an environment where you can now get that punctuated equilibrium. So, let's take a sip of coffee here and pause for a moment. Shout out to my friend Brett. He did recommend that I now this isn't it. This is still Mississippi grog, okay? But I did purchase some Carolina Christmas blend, whole bean, half a full pound. Yeah, so waiting for that full bean package to arrive, FedEx baby, and I'm looking forward to that coffee. The blend is going to be 2 tablespoons of Mississippi grog, 2 tablespoons of Carolina Christmas, 2 tablespoons of MCT oil, and 2 tablespoons of grass-fed organic butter. And that is the best breakfast in the world, guys. Interesting. Okay. So fully risked spread to the short side on Bitcoin. We don't have a lot of price activity now to talk about. We've gone over the technical reasons and the technical indications why. So having covered the daily and having covered in my opinion, the direction, the overall fundamental direction of the market, which is to the downside for some extremely important technical reasons. We're going to look at the lower time frames, and then we're going to go to where I think the Craig Wright created the Cambrian explosion, hard to get sense. And then we're going to go to the lower time frames on Bitcoin, and then we're going to go look at some altcoins as well before we make a brief stop with Ethereum. And then, time willing, we're going to look at some Forex charts and potentially some precious metals. Palladium, obviously, making a nice move again. So let's go down to the 4-hour time frame, as we are wont to do. And we did talk about this yesterday. The 4-hour time frame on this candle right here. So we are looking at UTC time. So on the midnight candle, on the candle that opened up on midnight UTC time on the 23rd, we did get the full risk trade to the downside on that. We did get the full risk trade to the downside on that. We have 2 candles of slight consolidation and chop, and then we do catch that large move to the downside. And what's interesting is that I was talking to several members in the group who that's exactly how they caught the trade. And that's what's really interesting. And of course, that's something that I'm currently working on automating for myself because, again, I've been a consistently profitable trader for a long time, simply trading the higher time frames, not delving down into the lower time frames. Of course, I come from a background of trading nothing but lower time frames in the foreign currency markets, as well as trading the stock open. So it was a real refresher to me to modify my strategy and move to the higher time frames and still get good, consistent results. So on the 4-hour time frame, you would have caught that movement. You would be out of the 4-hour. You'd be out of your 4-hour short right now. Excuse me. What I wanted to carry on with that. So basically, that concept is taking a manual daily strategy and then a slightly automated lower time frame strategy. All right. And, again, we have friends like Wally, GBU Wally, shout out to him, my good friend, who kind of specializes in that sort of thing. And then we have a lot of great guys in the group working in the Pine chat room and, kind of working amongst themselves on building up those systems as well. And I think that's great, and just, because that's exactly what we're always looking for. We're always looking to optimize what we do and increase our results and increase our exposure to the market. Now, on the 4-hour time frame, there's no setup right now. We do have a crossover of minks to the upside above noise. However, commodity channel index is still below, so there's no confirmation there. Going down to the 1-hour time frame, which is dangerous because looking at this chop is a little tricky. Yeah, I mean the confirmer kept you out of the 1 hour long here, and you have a very risky 1 hour long if you ignore the baseline and you ignore the fact that you initially got the first long signal like 20 bars ago. So this would be something that I avoid like the plague. So even the 1 hour time frame has you flat. And this is exactly kind of where our strength is in PTP, is that we trade trends. We're good at identifying trends, and we absolutely avoid this nonsense noise. Now, when we have market structure like this, the one potentiality is trading a mean reversion strategy. All right. And again, this is something that I think you're going to get the best, or excuse me. This is something where I think you're going to get the best results if you do end up using automation to a degree to help you out with. So we're going to get rid of the baseline and we're just going to look at my script. This is volatility expander, and it's going to be difficult for you guys to see that bottom line. So I am going to change that to white. And again, this is a very simple script on the hourly time frame. Typically, my approach to this on the 4-hour time frame is when we are in a period of chop, when we go below the lower band of volatility, we buy, and then we target or we sell when price retreats back to the median or to the upper line. On the hourly, the other way to do it too is like once price goes below and then comes back up inside, you can buy it up that way. You would have had a small losing trade here. Actually, a small losing trade here, but no. These all close below. Then you can buy this one up. This does give you a small win. Overall, not too good. We've pointed out a lot of areas where this has worked really well. Hasn't worked great at the moment because we've only gone below twice, and there is one losing trade there. It's a very small losing trade, and then an okay win. It's not a huge win, to be quite honest with you. But again, I think that would be the type of strategy that we'd be doing here. You can utilize this with ATR bands. You can utilize this with Bollinger bands. But I do highly recommend backtesting the strategy and also trading with very small risk because it's just to supplement what you should be mainly looking for, because your big wins are going to be coming from your higher time frame trades and your correct identification of trend and your correct identification of volatility to take those trends in a profitable way. And if you're interested in learning those skills, if you're interested in trading with us, you can, of course, check the link at the top of the screen. That's exactly what we do. That's pretty much what we focus on every single day, is teaching people these skills, teaching people these tools, and teaching people the rules to profitable trading. Okay, we're going to take a brief break here, and I want to look through the chat and answer any good questions that have come up here. Randall Krotz says, shorting here could be hazardous to your cash flow. When you think risk reward seems very risks. I assume you mean risky. Well, hopefully in this portion of my analysis, I've laid out my reasons. I do think that there is a high probability that we have much lower prices, unfortunately, coming in for Bitcoin. That would put us down at the $6,400, $6,200 region. When price is bullish, you buy dips. When price is bearish, you short corrections, right? And this is not a correction. This is a big move to the downside. So ideally, I would prefer to short a correction, but we don't have a correction in front of us. And we also have a full risk signal coming in on the daily. And those are not to be ignored because those have gotten us into some of the most profitable trades that I've ever been in. All right. Steve H says, good morning and good stuff. Good morning to you as well, my friend. XRP sure are smoking the airwaves with all their hype, more so than usual, again, from Randall Krotz. It's definitely a thing, man. Ron Legato is loving Monaco today. Good for you, my friend. Igor is longing Chainlink in the bull run from today. Neo Gaming says Chainlink was 70 cents 10 months ago. Buy high, sell low. Wendy says drum roll. Neo Gaming says, I would concentrate on the blue chips. Top 5. Chainlink has pumped all of 2019. Chainlink just got its 55% Palm Beach Tika pump. Yes, Tika back at it again. Is this channel XRP friendly? Not, I mean, the answer is really, really no. I mean, we trade XRP. And I have nothing negative to say about anybody who believes in XRP or is an investor or a hodler. But I give my honest opinion of XRP, and so far it has not been very positive. And I hope that that's based on objective data and facts, and that's exactly what I try to cover. I typically don't come on. I mean, listen, I've poked some jokes at XRP. But for the most part, I am a data-driven, objective, analytical person. And I like to have good fundamental reasons. I really feel uncomfortable just being silly. I'm okay being silly, but I need to have good reasons behind it. So at the end of the day, you're going to have to make up your own opinion on whether or not you agree with my analysis. Digital Daddy, what's up, my friend? Farbod, good to see you. Do I feel that alts will continue to go down? Alts are not going down right now, sir. They are going up, and they've been going up. So I think they will continue to go up, actually. Ken D says, yeah, Justin, your Ethereum short was a good call, man. Thank you very much, my friend. And you are up 15.7% today. Congratulations, man. Ricky Thompson asks, losing trade from a choppy market or signal changing after you enter the trade? Combination of both. Combination of both, to be honest with you. Angel Tech 72 says, cracking crypto, the best TA on YouTube. Thank you. I highly appreciate that. Thoughts on purchasing Twitter stock after the dump today? You know, I don't know. We'd have to go take a look at the technicals. I'm not huge into tech stocks. I think they've kind of peaked, and I think we've got a choppy area in front of us. That's, you know, I have a fairly large dividend stock portfolio. I've been growing that for about a decade now. So for me, honestly, I buy really boring stuff like Hormel, you know, and 3M. You know, like really, really boring stuff, to be honest with you. As far as stocks go, I'm typically not very, very high risk. You know, I'd say probably the highest risk portion of my stock portfolio right now, which is fairly new, is AbbVie. And that's because of the deal, and that's because of some fundamentals. And I do have some options on that trade as well. Seeking Alpha has a really good article on this as well that kind of breaks it down. But yeah, as far as like big tech stocks, I'm just not, I think they're good to trade, but I'm not trading stocks right now. That potentially might change next year with Charles Schwab reducing fees, and I would be trading on Charles Schwab as a broker if I was going to go back to trading stocks. But because they reduced commission, brought it down to zero, I think that now we're in a situation where people who are trading cryptocurrency should be diversifying already into Forex and potentially now into stocks, because now things are different. You know, you want to make that transition carefully. And I know a lot of people are going to push against that. But there are going to be times when if you're only trading one market of highly correlated assets, you know, you might have a little bit of drawdown. And that's okay. Again, we just trade crypto currently right now, but we're working on diversifying into Forex, and we're going to work on diversifying into stocks. And I think that's good as well. So, but yeah, again, specifically to Twitter, I'm not very, very bullish long-term on a lot of these big tech companies. I think that there's a lot of changes. I think that things like crypto, and I think that decentralization is going to shake these things up. So I don't really see them as high value propositions. They're highly volatile, so I'd be more prone to trade them. Like, you know, Apple stock is highly tradable, and Tesla stock is highly tradable, and all of these, you know, highly liquid, very volatile tech stocks, I think, are good to trade. But as far as buy and hold strategy, I'm not. Big tech is not in my buy and hold watch list right now. Things like consumer goods, things like Vice stocks, things like, you know, companies that manufacture like chips and soda and tobacco and alcohol. Those are kind of on my watch list because, you know, I think that we're not far off from a recession. I don't think we're far off from a recession. And in a recession, you tend to have people spend money or more money on really bad stuff, unfortunately, but it's just the way the economy works because they're depressed. And so they're buying cigarettes and they're buying alcohol and they're buying junk food and they're, you know, whether or not that's good or not for society, I'm not, you know, it just is what it is. Those are the markets that tend to hold value or do well, whereas the highly speculative things like big tech in a recession tend to dump straight down into the gutter, which presents a great buying opportunity. But that's when I would look to buy those. Anybody know about Veritasium? Bixweir is so big on it, but I hear stuff way worse than that about CSW, and that's saying something. Yeah, I covered Reggie Middleton and Veritasium in the past. Reggie Middleton already got arrested, or not arrested, but indicted by the SEC. Or I don't know if I'm using the correct terminology, but he got in trouble with the SEC. We did cover that in a previous episode. We also talked about Veritasium. I think that it is largely a scam. With almost no holds barred. Now, again, I think that Reggie is a fairly intelligent individual, but the way that Veritasium is set up and the way that their business has been conducted is very shady, and in my opinion, untrustworthy. And I would never put any money into that. And I've never been one to put money into these really, you know, hot stock tip, you know, crypto garbage crap stuff. Do any members use my method to trade stocks? Yes, they do. I know specifically of 2 individuals right now that are considering. That are either in part or considering transitioning further into full-time utilizing pathways to profit in the stock markets exclusively, and a little bit of Bitcoin and Ethereum potentially. So not exclusively, but where are all the Poloniex USA traders going? BitMEX with a VPN. Crypto Rick says, hey, Justin, if you are trading for USD on ByBit and you're short Bitcoin with 2x leverage, if you close half your position, do you asset trade your closed position of BTC to another coin and then 1x short to maintain your USD? What I actually do is I calculate what my new net profit is and what my new net equity balance is. And then I just close less of my short because I want to remain hedged, right? So remember, whenever we're shorting Bitcoin, you've deposited Bitcoin onto the exchange, so you're already long Bitcoin by holding Bitcoin. That means to actually go short and make money. So again, I know I say this all the time, but so many people get this wrong. So I just feel I have to like really break it down every time. If you have $10,000 worth of Bitcoin, so let's say like, you know, right now Bitcoin's at like 7,441. So you've got like roughly like 1.3, 1.4 Bitcoin. Okay. And you want to hedge in a way that if price goes down, you don't lose dollars, right? So what you would do is you'd go to ByBit or, you know, whatever platform. I utilize ByBit. And if you guys would like to utilize ByBit as well, there's a link down in the description. They give you $60 if you make a deposit of $100, I believe, on a top of the margin bonus that they already offer for individuals. If you want to short and protect your equity, meaning if Bitcoin's price goes down, you don't lose any money, you have the exact same amount. And this is really good, especially for peace of mind and people who want to go to sleep, right? So regular folk just trying to trade Bitcoin and make hustle on the side. You'd go short $10,000, 10,000 contracts, right? Now you're just flat. You're not going to make any money if price goes down, but you won't lose any money minus funding. So, and trading fees. Now, which compared to what you stand to lose by just having long Bitcoin and watching price sink from 14,000 to 7,500, which is where we're at now. People, come on, hello. Then what you want to do, if you actually want to enter into a full risk short position on top of that, you need to add your position size to your hedged account. So if you run your trade through the calculator and it tells you should risk $4,000 on this trade. Well, now you need to add $4,000 to your $10,000 short. So you need to actually be short 14,000 contracts. So in that scenario, we're short 14,000 contracts. I hit take profit 1. Okay. Well, in advance or after the fact, generally after the fact for me, because I'm okay with a little bit of slippage here and there. Because again, I'm playing the rounds. I'm not automated trading. I don't need exact numbers. I'll either re-put on excess to my short or just close less. Closing less is the more eloquent approach, right? So you can calculate based on your position size how much money you're going to make off of your trade, because you just take your position size and then, you know, you take that position size times the percent movement from entry to your take profit 1. And you're like, okay, cool. Divided by 2, because I'm selling half at TP1. This is how much equity I'm going to have. So I need to close out less of my position because I need to take that initial equity and add that number to it that I now have, right? And then I need to subtract from that number my position size and then divide that by 2, and that's how many contracts you close out, right? So you start off with a number that's 10,000 and you add a position size to it, and then you calculate how much this position size is going to make in profit at TP1. And then you add that number to your 10,000. And then you take that number minus your position size, divide by 2. That's what your TP1 should actually be if you want to stay hedged. Otherwise, you just set the trade up like a normal person. And then after the fact, go in and hedge up. Alternatively, a way to avoid all of this is to use a separate account or a separate platform. I just prefer using a separate account and only use one dedicated account for hedging all of your funds. And that's your big account. Like if you have, $40,000, or let's just keep to the 10,000. If you have $10,000 worth of Bitcoin, what you should be doing is keeping about $7,000 worth of Bitcoin in cold storage, and you should be putting about $3,000 of Bitcoin onto your exchange platform. And then you should be using leverage to take position sizes as if you had $10,000 on the exchange platform. That way, $7,000 is in cold storage, and you can't lose that Bitcoin, but you can utilize that $3,000 to hedge, right? So the better way to do this potentially is to take, let's say you're going to keep 6,000 in cold storage. So you're going to take 3,000 and put it on a hedging account, and you're going to take 1,000 and put it on a trading account. So you use the $3,000 account to hedge $10,000, right? and then you use the trading, and then you really rarely ever log in there. You use the $1,000 account. You don't have to, short. You just leave the $1,000 on it. You just stay long, no matter what. You're not in active trades all the time. You don't have to worry about hedging before you go to bed. You only use that account to put on trades. You don't have to do any of this excess calculation, right? Where you're going long, where you're going short, where you have to add the position size and all this. I'm just teaching you guys that if you're only using one account. If you have multiple accounts, if you have one account just for hedging, where you hedge all of your equity, then all you do once in a while is after you make profit or when you put on a trade, just go into your hedge account and increase or decrease the amount that you're hedging. That's it. It's very simple. Math's actually quite simple. Oh, that probably sounds complicated, but it's really, really not. Okay. Where are all the Poloniex USA traders going? Sour Pebbles asks. Yeah, BitMEX with a VPN. Sup, foo? GB Wally? I believe in Bitcoin long term, but I really want to sell. What to do? Hedge. Go open up a short, man. Go open up a short. Don't sell your Bitcoin. Don't sell your Bitcoin. Like that's I never recommend that people do that. Once you buy Bitcoin, don't sell that shit, man. Then you get into this spiral of like you're out of the market. When do I get back in? It makes you lose faith. It's just it's a bad spiral, dude. Just go open up a short, man. Just go hedge your position. You've already lost money, probably. I mean, no offense to you, but I'm saying if you're like, man, I really believe in Bitcoin, but I want to sell because I want to lock in profit. Don't sell, man. Just go short. Price will turn back around. Bitcoin is fundamentally long-term bullish. Now, I'm not telling you what to do. It's not financial advice. You know what I mean? Like, make your own decision. But in my opinion, I have never sold Bitcoin. That's not actually true. I have sold a little bit of Bitcoin. I've also transacted it, but for the most part, I hedge. Like if I want to sell, instead of selling, I just pseudo sell by going short. And that way I'm still in the market. And all I have to do psychologically is instead of buying back into Bitcoin, which is a big decision psychologically, you just close a position and now you're long again. And that question was from T-Mac. So again, my friend, not financial advice, not a financial, and people say that shit's silly, man. I'm not, people don't have to say that, but I just say that because people are used to hearing it. But again, I say that more to stress the fact that I want you to make the best decision for you. But I think that people who sell BTC into USD with the plans to like buy low and sell high, I think that's silly. I think you should short and then just close your position. All right. When you say tradable, what exactly do you mean? I am new to this stuff. Says USGC Assassin. I mean, well, like if you can trade it, if you can buy it and sell it or go long and short. Procter & Gamble is a good company. I'm a pretty big fan of J&J Kendi. We'll be buying lots of beer. Reggie didn't get arrested. Yeah, I didn't want to actually misquote or misrepresent. I couldn't actually recall, but I know that he got. I feel like he did get arrested, though. I feel like he did. I know that he was indicted or sued or something, and I know that the SEC was involved. Eli back. I think that's you, my good friend. Coming hard and strong with the $10. He says, another day, another great trade. Can you please look at SolveCare? Hope you and this wonderful community is having a great day. I'm sorry, Eli. I saw a fucking Crypto Jack's comment. He's like, one does not simply short Bitcoin. One does not simply walk into BitMEX, sir. Whoosh. Eli, thank you so much for the generous donation, my good friend. Let's go take a look at SolveCare for you, man. What did I say yesterday? Okay, I believe what I said yesterday is that what I believe I said yesterday is that or not, maybe it wasn't yesterday, maybe it was right here. Because this candle hadn't closed. This is a fresh candle. I said that we're not in a trade right now because we got this exit signal with this color flip, but I would be bullish and looking for fresh opportunities. It seems like that came on the candle that opened on the 23rd. So it seems like this candle was bearish. So maybe we were looking at this yesterday, because I do recall that there wasn't anything that looked positive at the moment. I was talking about the potential baseline reversal bounce, but I was talking about looking for confirmation. It seems like we would have potentially got that, because I know there is a good set of people who are using just the Heikin-Ashi color flip trend change as the continuation signal instead of waiting for a remix cross, because you would have had to have an indicator reset, which is the preferred method, waiting for minks to kind of cross back up and cross back down. But just as I kind of said yesterday, and my theme yesterday with a lot of looking at a lot of these altcoins was that I'm bullish. Like, I think a lot of altcoins, and I still feel that way, I think that altcoins are largely bullish. You know, there are some, you know, I'm still in quite a few altcoins, and I watched I was negative on altcoins for most of my altcoin trades, with a few exceptions. And now that's swung back around, and I have cut my drawdown in half overnight, and it's good. That's because I knew to hold fundamentally on. So I don't see anything negative here about SolveCare, man. There's nothing here that is. So again, to be fair, to be honest, we got a long signal here on the closer of this candle, and we would have caught this run up to the upside. By all rights and purposes, you should have either been out on this wick, because that would have been, actually it was, I believe it was like right here, to be honest with you. It was like TP3, we looked at this yesterday. And there was not a re-entry signal. To be fair, there hasn't been a re-entry signal whatsoever, because because you need an indicator reset. Like, minks needs to go below the noise line to tell you that you're now in bearish territory, and then needs to come back up. That is the signal when minks does the crossing. So we can look at alternatives, of course, when the market is overall bullish and we're looking for reasons. Of course, there is the reversal baseline bounce territory. You can look at the fact that the Heikin-Ashi color did flip yesterday, bullish. You can look at the fact that you made a higher high. So I think you were already in SolveCare. I think yesterday I also said that you should take half of your profit and move your stop loss to break even, because you were uncertain, and I think that's always the safest move to do. I don't remember what your buy-in was at the time, though. So my recommendation now is, if you did not take profit yesterday and move your stop loss to break even half, I would recommend that you do that again. I would recommend that you do not again. I don't think you should take another half. If you didn't take half yesterday, you got greedy and it paid out for you this time, okay, then you should take 50% profit if you have not done so already. Move that stop loss to break even. And again, I'm fairly bullish on altcoins. Could we reverse from here? Could we just chunk down as altcoins are woe to do? Could happen, man. It happens like a thief in the night. But again, for right now, I feel bullish on altcoins. I think most of these are going to be worth holding on to. It doesn't really matter what the ticker is, to be honest with you. Altcoins are either bullish or they're bearish. Very, very rarely is there, whether they're bullish or bearish on average is a random walk. But when they're bullish, I mean, you're patient, man. I have the answer to overpopulation of cats, Ken D says. Just buy cat futures. Don't sell and just expect delivery in a few months. Well, okay, we covered the Reggie Middleton story on our September 14th, 2019 show. SEC files emergency action against Verycoin founder. Thank you, Jack. Yeah, if you guys want some context, go check out the video that we did on September the 14th. Very saw some of the strongest SEC enforcement action in the space to date, caught red-handed paying exchanges to wash trade and pump fake volume, among other shenanigans. Yes, that is correct, yes. ACDC says, hey, Justin, you know a lot about anything you try to explain on the show. That is why it is easy for you. But for most of the people, it is quite complex. A video or documentation, thank you. Yes, you are right. I think that some good explanation would help, or at least a helpful video, correct. And, I go over this quite a bit in the group, in my series on risk management. If you are in a short, do I, under any circumstances, not close your position when time transformation crosses up? If I'm not using a strategy that uses time transformation, then no. But if time transformation is going to be my exit indicator, then I almost overwhelmingly no. Overwhelmingly no. I have been known, again, I'm not a perfect human being, and sometimes these pay out and sometimes they don't. I'm a consistently profitable trader. So, I kind of allow myself about, anywhere over the course of a year, like 5 to 10% wiggle room, right? Where I can take a few subjective trades based on some fundamentals, like Litecoin, for example, is a good one right now. But I don't push it, man. I don't push it. I mean, again, 90 to 95% of all my profits come from disciplined, consistent, repeating the same thing, rinse, wash, and repeat every single day, day in and day out. USGC Assassin says, I'd like some kind of knowledge behind crypto and stocks. I have been thinking about buying Bitcoin since it dropped a lot. I have also been looking at eBay and Twitter. I am a long-term investor. I think that's a good place to be. I think that's a good mindset to have before you kind of jump into trading, is to actually buy and hold an asset. My recommendation for you, I've been buying stocks since I was before I was in my 20s, but very, very seriously with a plan and purpose since I was in my 20s, as well as other investments as well. Anything I buy, I don't plan on selling it in my lifetime. I plan on buying things that are such high quality, that have such future use case, that I can pass that stock down to my daughter. All right. That's my whole approach to investment. So, I would recommend getting familiar with Google Sheets, getting a couple spreadsheets, understanding, the upsides, the downsides, and really being committed to this, because it takes some mental strength, man. It's not hard to just buy and hold, but it is, because you're going to want to sell. So I think you should approach the market with I'm going to buy and hold forever mentality. Okay. Looked at Solvecare for a while. It is 12:54. Let's go check back in with King Bitcoin real quick. Having a nice little nothing right now. Consolidation on the daily. If we were going to kind of play out the same sort of price behavior that we saw from this range, we haven't really established anything yet, people. So from a price action perspective, this data is going to have to get updated as we go. So what I think we're likely to see is, I think on an intraday cycle, I think we're likely to see grabs for liquidity down below 73.74. Now, I really wouldn't want to buy those because this range hasn't established itself very well, and it's possible the price stabs down here to 72.95. But again, that's a liquidity grab area to be looking to buy into, and also stabs above 75.36, potentially all the way up to 75.75. I think those are going to be potential liquidity grab reversal trade areas and opportunities. Very high risk, very price action based, and not really things I feel comfortable with doing, but they are there. They are there. Okay, so nothing really happening right now, and of course we just follow current price. So Ethereum, let's go look at Ethereum over on BitMEX. We'll go back to the daily. Again, the daily, we've been in a full risk short trade on Ethereum since the 16th. Yeah, the 16th, with 32% of my equity in this trade. Give you guys, yep, so you can see right here. Here was the initiation signal right here. Took it a little early. Held it throughout all this chop, which is good, and down to the downside. And we will continue to hold this trade open. Yeah, we are getting some long wicks to the downside, but I think that's a little different here. Again, the last time we saw this after a pretty big move down, this one obviously much bigger. So I was very happy to be in this, very happy to be in this move as opposed to missing this move. But we did see a, almost $20 bounce from Ethereum. And that led to ETH-Z19 outperforming BTC USD. ETH-Z19 was quite interesting to trade during that period in time. So keep your eyes on ETH. Keep your eyes on ETH-Z19, I think. Keep your eyes on ETH Bitcoin. If ETH Bitcoin starts to rise, and we'll actually go take a look at ETH Bitcoin, actually. Yeah, ETH Bitcoin is putting in signs of continuation right here. We don't have any confirmation yet, but ETH Bitcoin is still in bullish territory. So, I've already locked in some significant profit on ETH-USD. And I think that here's the thing. As long as altcoins continue to outperform Bitcoin, I don't think that I don't think that we have a big danger of Bitcoin putting in significant trend reversal at this point in time. I think that it's likely that we get some really scary wicks to the upside on Bitcoin, but I don't see sustained bullish trending coming from Bitcoin until that is the moment when the trade is now to the upside. So you need to be watching the altcoin markets and looking for them to continue showing that they are outperforming Bitcoin. And as long as they are, that's where liquidity is going to flow. And if ETH Bitcoin starts outperforming, continues on in its bullish ascent and doesn't dive under the baseline, so as long as it stays roughly above 0.021, as long as it stays roughly above that price level and doesn't put in a whole lot of negativity, I think that ETH-USD has a better chance of a sustained bounce. Again, maybe I would say, to be conservative, anywhere from maybe a $15 bounce from Ethereum. So that could pop us back up to about 177. So pretty much, again, and our Donchian is coming in at 175. So basically just looking for a reversion to the mean and then take the short again off of 175, 177. I think wouldn't be a bad setup. And I expect to see that more out of Ethereum. Again, look at how Ethereum outperformed Bitcoin in percentage to the upside on its bounce. I think we can expect to see that again. But again, that's something that I would be far more hesitant. So the way that I would play this right now is similar to how I closed Bitcoin and kept Ethereum short open. If I was going to be looking to trade a reversal, since I'm already in really good profit on Ethereum USD, I would potentially take that as a reversal and I would hold Bitcoin open as a short. That's what I do. So it is 12:58. So we're going to take a quick break. Before we go to break, we need to talk about San Francisco Blockchain Week. Anyways, guys, so San Francisco Blockchain Week is coming up in less than a week. On Sunday, my toes are going to be stepping onto the airplane and stepping onto the sandy beaches of California, as well as the toes of the rest of my friends. And I don't mean me stepping on their toes. I'm talking about our toes stepping into the beach. Sometimes there has been some toe stepping, though. Yeah. Now, anyways, guys, San Francisco Blockchain Week is going to be fantastic. I'm really looking forward to it. We've got all kinds of interviews set up. From what I understand right now, not everything is locked in. There are some interviews that are locked in, but right now I've been in communication with Ziliqua. I've been in communication with Seller. I've been in communication with some economic professors. I've been in communication with Binance US. I've been in communication with some individuals from the World Economic Forum. There are a few angel investors. There are a few hedge funds. Some really excited to go down there and interview some of the most innovative minds in our space and also cover some of the latest developments coming out of the space. Now, we'll be attending. We're also going to be doing an event, I believe, on Wednesday for the community members that are going to be there. Make sure to let us know if you are going to show up. And I'm looking forward to meeting all you guys down there at the Blockchain Week event. If you guys want to attend, you can still purchase tickets for the Epicenter event, which is going to be absolutely fantastic. It's one of the most looked forward to cryptocurrency conferences and events in the world every single year. You can find tickets with the link in the description, and that link will save you 15% off your purchase price. So make sure to do that if you want to attend, and I'm looking forward to seeing all of you guys there. We're also going to be live streaming and broadcasting and producing podcasts and interviews and episodes down there. So make sure, if you have not already, to subscribe to this channel on YouTube and follow us over there on Twitch and Twitter. Twitch and DLive, but you can follow us on Twitter because this is the only place you're going to get that cutting information right from the source, man. Anyways, we're going to take a quick break. Don't go anywhere. Go do some calisthenics, have a smoke, get some coffee, and we'll see you guys in just a few seconds. All right, guys, and we are back. Hopefully you're doing absolutely fantastic, and hopefully you didn't go insane during the break, but we are back. Shout out to 125 people watching across YouTube, about 175 people watching combined across all of the networks. So much love, much appreciation, guys. We are here every single day, so make sure to subscribe if you have not already. And speaking of which, Jeremy, thanks so much for the sub on YouTube there, my good friend. All right, on the Ethereum chart, are getting now I did want to break down kind of the hourly because we did not look at the hourly. Again, what do we see here? We do see a little bit more positive bullish momentum coming in from Bitcoin. Did actually get a long signal that we could not have that we could have taken if we were ignoring the baseline. We did get another signal over here, which would have you in for long. So again, this one generating a little bit of profit. This one has not generated profit. We're just largely going sideways. But again, as I said, keep your eyes on that ETH Bitcoin. And as we can see some good opportunity, when you see ETH Bitcoin outperforming, sometimes it's more profitable just to take that ETH BTC trade. But that also does point out good things toward ETH USD, because that has been the pattern that we have noticed over the past a little bit of while. So again, still BCH Z19. This is a trade that I'm actively in right now. Again, I still feel, and again, you need to look at the technicals of the individual altcoin, but I think that altcoins are looking good. I think that altcoins stand to outperform Bitcoin, continue to outperform Bitcoin. If we go look at Bitcoin fundamentals, we can go look at Bitcoin dominance. I'm quite bearish on Bitcoin dominance, not only on the lower time frames, but also if we go to the higher timeframes as well. We are in a pronounced downtrend on Bitcoin dominance, which since Bitcoin has recently topped and is on the way down, does historically point out very, very well for altcoins. And we've already seen some altcoins absolutely charge out of the gate, putting in triple-digit returns. Okay, so having said that, I'd like to go take a look at Forex and precious metals here real quick. So let's do our Forex market analysis. And then we're going to cover some of the breaking news of today and my thoughts on that. So looking at the Aussie yen to begin with, as I said, not in an active position on the Aussie yen. I don't think it's appropriate to be in an active position on the Aussie yen. We are in bullish territory, but we're looking for a re-entry signal. And as I said, as I've been saying for the last few days, opportunities to get out. And we do have full confirmation to be out of any Aussie yen long on today's daily close. The Aussie Kiwi, I am actually short on the Aussie Kiwi. Ended up entering about midday. I ended up doing my Forex trading last night, pretty late last night, which is rare for me, but I just did not have the opportunity to trade the daily close, the daily I wanted to close yesterday, which is good. I got some better entries on my position. So I am short on the Aussie Kiwi. Of course, before we start, I do want to look at the news that was coming out today. Of course, we did have a lot of Euro news, so I avoided trading any Euro pairs like the plague. Of course, we had French flash services, German flash services, as well as manufacturing. And then we had the main refinancing rate, the monetary policy statement, as well as the European Central Bank press conference. Now, I haven't actually stayed plugged in this morning. I don't really know the results of these, whether they beat the forecast or not, but I just know that when these events come up, I do not touch the euro. Now, looking at tomorrow, we have a pretty open day, so we're back to being able to trade any pairs. There's no massive news coming out tomorrow for our Forex calendar, so we are good. We are open to take any signals that we see today that are appropriate. Obviously, the Aussie Kiwi is bearish, so looking for the downside trade. That was confirmed yesterday with high volatility. We are having a little bit of a retrace today, so I'm actually pleased that I got that better entry price into the short and still looking to take price down to 1.06398 would be my first to take profit. The Aussie CAD. The Aussie CAD is also going to be signaling a full risk short trade on today's. Now, I already have a couple Aussie trades in, so I likely will not be taking this, but I do think the Aussie CAD does stand out right now as putting in the bearish momentum and a good trend following signal to the downside. Quite a bit of consolidation, and I'd like to see us have this nice swift spike down. So again, looking at some targets on the Aussie CAD for the short trade today, again, on the Aussie CAD tonight, we would be looking to enter again, roughly price sitting at about 0.89151, and we'll be looking down at 0.88617. So generally looking for about 54 pips on our first take profit there on the Aussie CAD. Moving over to the Aussie dollar. Okay, excuse me. I am not in an active position on the Aussie dollar. The Aussie dollar I was long on, you guys will recall, and I had my stop loss at break even. I did take some profit up here at the top, and my stop loss was triggered today. Fairly significant stab down on the Aussie dollar, so I'm now out of that. I actually will now, I'm going to recant what I just said about the Aussie CAD, and I will now be looking at the Aussie Canadian for a potential trade setup. Now, let me take a look here though and see where we are at in relationship to here we go. To the baseline. And yes, it does look like we are okay. We're A-okay to take an Aussie Canadian short. So rather than avoiding that because of having too much exposure with Aussie-centric pairs, I will actually be looking to enter into the Aussie Canadian tonight. See if I'll wait for the daily close, see if we can get a little bit of a better entry price. Aussie dollar, we just talked about that. The Canadian Swissy, I am long on the Canadian Swissy. Entered into the Canadian Swissy actually on yesterday, today. So on today's candle, but last night, which would have been the open of the new candle, got a little bit of a better entry price, as you can see from trading the daily close, which was, obviously good in hindsight. But price on the Canadian Swissy is kind of taking off nicely in my direction. And again, looking for an initial take profit on the Canadian Swissy. Right around, 36 pips, about 36, 37 pips. Canadian yen has been quite bullish. I'm not going to lie, the Canadian yen has been quite bullish, but again, just this pronounced high volatility to the upside. This is a chart pattern that I don't really like. I don't really like diagonal chart patterns such as falling wedges or ascending wedges or anything of this nature. I don't find that they have a high probability to work out. But looking at the Canadian yen, again, this is something that I would like to see a retreat on and then a reinitiation. So again, I am looking for this to top out here fairly closely. I think the volatility is spewing. Again, that does mean that we can't have a big explosion to the upside. Of course, the Forex markets are going to be manipulated by the big banks, and they're going to move in whatever direction you have a lot of people on the opposite side of. But again, this is just a market. The Canadian yen is obviously a pair that I am staying away from. Looking at the Swiss yen, there's no trade to be taken here. We are retreating. We are having a pullback in bullish territory, so I'd be waiting for a more pronounced movement down to the baseline, somewhere around 108.56. To be looking for continuation trades potentially. We are back now. We can look for fresh euro trades after staying out of the euro markets yesterday or closing out of euro trades yesterday. Looking at the euro Aussie, this is not anything that I'd want to be looking to trade. We do have a kick off up of the baseline. So if one was looking for a reversal baseline bounce, this does fit the qualifications. We have had some nice pronounced contraction and compression of volatility. We don't need volatility to confirm a trade. We don't have a proper signal from Minx, and our confirmer is 0. Now, the only thing here that is good is the Heikinashi trend flip after the baseline bounce. So if one was looking to go long on the Euro Aussie, I would highly recommend low risk, because that's the only good thing that we have going for us right here. The Euro Canadian, on the other hand, is looking to give us a full risk short signal, but we just don't have the volatility necessary. So let's keep our eyes on the Euro Canadian and see what we can do. Euro Swissy is in a no trade zone. We are in bullish territory, but again, looking for a more of a pronounced pullback to the baseline here around 1.0946. I would like to see. So a pullback of roughly, like to see a pullback in the vicinity of about 71 pips before we'd be looking for anything on the Euro Swiss. The Euro Kiwi, pretty explosive movement after closing below the baseline. Of course, we do have some very long wicks that is throwing off our Donchian here a little bit, which is unfortunate. But overall, I would not be looking to take any trades on this, actually, to be quite honest with you. Well, actually, to be quite fair with you, this might not be a bad short trade because we did actually get a short signal last night that I didn't enter. And now we've got a pretty explosive movement back up to the upside. So grabbing a lot of liquidity. So, actually, this is a little out of my wheelhouse, but I would actually be interested in taking the Euro Kiwi short. I think that also gives me some good hedge exposure on my other trades. Looking at the Euro Pound is also in a no trade zone. We should be out of shorts after catching this movement to the downside. Again, we were able to short on this candle, or potentially this candle if you jumped the gun a little bit, which is good. But again, great movement to the downside on the Euro Pound. And I wouldn't be looking to, I would be looking to be out of shorts, not actively entering into longs at this point in time. That would be a reversal territory. Euro Yen, we should be out of longs at this point in time with Heikinashi signaling to be taking trades in the opposite direction, but of course we don't have any other confirmation, and we are above the baseline as well. So very similar to what we've talked about with other pairs. I would be looking for a retreat here on the Euro Yen, about about 123 pips, to be quite honest with you, down to the baseline. Euro dollar, extremely similar territory to the euro yen. Looking for a pullback on this anywhere from the range of 73 pips before I'd be looking to take price up again. The pound kiwi, interestingly enough, though, is in bullish territory. We do not have continuation at this point in time, but I would be looking for the indicators to give us a fresh signal to the upside. Jules, thank you so much for the subscription over there on YouTube, my friend. Pound Canadian, similar to the pound Kiwi, be looking for continuation on this as well, but nothing on the tables for us at the moment. The pound Swissy is absolutely flat. I would actually be looking to exit because it is most likely that the next candle that we see is a large candle to the downside on the pound Swissy. So I would be probably out of this trade. Again, nice trades on this candle right here, actually. Potentially jumping the gun here a little bit if you entered on this candle. But this candle was the safer entry, although you did give up quite a few pips. But again, captured a good range there of pips. Not bad for any trend following strategy. Pound yen, similar to the pound CAD and the pound Swissy, you should be out of long trades, and you should be again looking for a more pronounced pullback before entering into trades or continuation. Same for the pound dollar, and same for the pound Aussie. Moving on to Kiwi pairs, looking at the Kiwi dollar, we actually don't have an exit signal yet, so one would have been long on this candle right here. One would have taken a little bit of profit. You'd actually still be in the pound, or excuse me, in the Kiwi dollar to the upside. Now the Kiwi CAD is actually a trade that I'm in. And again, this is a good example of a shitty trade at the moment. But again, price has pretty much gone the opposite direction from my entry, as is rocketing towards my stop loss. So we'll be looking to exit this one actually today, and this is just kind of a farky trade. It is what it is. Ended up entering on really close to the close of yesterday's candle. Actually, I don't actually understand why it's over there. It should be over here because I didn't actually, to the best of my knowledge, didn't actually take that trade on that day. But and again, I digress. But here we are on the Kiwi CAD. We were looking okay. We took the risk. We had volatility expanding to the upside. The trade actually should have been entered in over here on this day, which would have given us an opportunity to hit TP1. I think this is a good example. Again, I've been slowly getting back into Forex and applying my discipline again. Just time constraints have not allowed me to always trade consistently the daily close, which again, you can see the unfortunate effects of that. Entering into the trade late, really shouldn't have done that, and I am paying for it currently with a little bit of drawdown. Kiwi Swissy, again, a lot of the Kiwi pairs, again, putting in this negative behavior to the downside as well. Kiwi Swissy looked decent. And now it's putting in a pretty big candle to the downside, similar to the Kiwi Yen. The Kiwi Yen is also something that I was long on. Now, luckily for the Kiwi Yen, I've already taken profit, and I do have my stop loss at break even here on the Kiwi Yen. So nothing to really speak of right here. Interestingly enough, we're not getting the exit signal yet from the Kiwi Yen either. So again, we're going to look at a couple things, but potentially we'll hold the Kiwi CAD trade open for a little bit of a bounce back, potentially a chance to sell at break even, or we'll just take the loss. It kind of depends on what the chart looks like tonight. The dollar Canadian is in a no trade zone. The dollar Swissy is also in a no trade zone. We don't actually have confirmation to take price to the upside. The dollar yen is similar to a lot of the other pairs we've looked at where we are in bullish territory, but again, we need a more pronounced pullback. Let's see here. The Aussie Swissy, as opposed to the other trades, again, is one other trade that I do have some drawdown in right now. There's really nothing to speak about. This thing is just kind of consolidating and waiting for it to move in my direction. And the dollar yuan, I am waiting for a recontinuation, or excuse me, I'm looking for a continuation signal to take the dollar yuan to the downside. And that about sums it up. Overall, doing well on my Forex trades for this month, averaging out. I'd say that largely my Forex trading has done percentage-wise better than my cryptocurrency trading over the last 20 or 30 days. The last 3 months of my getting back into Forex trading have been really, really good. This month is less performing, but I am outperforming my crypto trades at the moment. It was a little bit more so before 2 losing trades here on, and again, they're not losses yet, on the Kiwi CAD and the Aussie Swissy. But again, the Kiwi CAD more pronouncing to that to anything. But again, it's just a 2% loss if at the stop loss. So actually exiting at this point in time would be half the distance, about a 1% loss. All right, so it is now 121. Let's go take a look at precious metals and our CFDs. So we'll start off with ZAO. Again, so yesterday, so the previous time that I looked at ZAO, I'm really hesitant to enter into trades in ZAO at this point in time. Every signal that we would have potentially gotten to the upside if we ignored our volatility filter would have been losing trades here and here And that's good. So we didn't take these trades. Now, again, we have that same similar setup where we are closing above the baseline. We do have bullish confirmation from Minx. We have bullish confirmation from CCI. But if we look down here at Wadatar Explosion, what is it telling us? It's telling us do not take this long. Now, it's possible. Again, gold tends to trend quite strongly when we do actually get a signal. That is what we're looking for. We're looking for the next positive gold spot trade. It's not here yet, guys. It's not here yet. I won't be entering into gold long yet at this point in time. Looking over at palladium. Again, palladium kind of making a move again, a nice kind of rocket up back to the top of the trading range. Unfortunately, we should not be in palladium longs. We would have been in a fresh palladium long on this candle right here, catching this movement to the upside. Price has gone sideways. We've gotten the exit signal on this candle right here, and we're waiting for continuation on palladium. Again, quite bullish on palladium. I don't know if you guys will recall, but I bought a lot of palladium, physical palladium, not too long ago. Apparently it's the thing to do nowadays, but I bought it to diversify my portfolio, and it's pretty much just shot up like a skyrocket ever since I bought it. So I'm pretty happy about that, but I don't have any active trades on palladium at the moment. Looking at silver, again, silver kind of same scenario here. Pretty choppy. Again, we've had some good trends. Precious metals have been really good in 2019, but there's just not an active trade on the table right now. Not an active trade on the table right now. Now, one thing that we will potentially look at actually is there is a potential long coming in from silver. It depends on how the daily closes. We do need to close higher than 1781, which we are currently sitting at right now. So if we do get that close, I would take this trade with half risk because the Heikinashi, because we are, there we go. So if we close like this, that's a full risk trade to the upside. If we close like this, that's a full risk trade. If we close with the Heikinashi candle red, then that would potentially be a half risk trade, at least in the parameters that I've laid out on the stream for this particular strategy. And looking at platinum. Platinum is actually nothing. Platinum is not giving us a trade at this point in time. So gold and silver are looking bullish. We can trade those in synchronicity, and palladium and platinum we can trade independently. And neither palladium nor platinum are giving us long trades. But silver is. Silver potentially is. So we should be keeping our eyes on gold. The volatility isn't quite there on gold. So if you are going to enter gold based off the fundamentals of silver, then for a continuation trade, then I would be recommending half risk on gold, full risk on silver. Okay, so that's our precious metals and Forex markets, guys. If you guys like the analysis, make sure to let me know in the comment section down below what I can do differently, what I can do better. All right. And with that being said, guys, let's hop right over into the news. All right, so here we are in the newsroom. And what we're going to be covering today is some pretty good stuff, guys. So let's... First thing I want to talk about is something near and dear to my heart that I've talked about quite a bit lately, which is, of course, the American economy and the repo market calamity that will not leave us alone and is the most, apparent problem with the American economy right now. Now, the repo market liquidity crunch, we've been reporting on here at Cracking Cryptocurrency since the Fed began providing emergency liquidity back in September. And this situation appears to only be getting worse, with the Federal Reserve announcing that starting today, their repo rescue operation will expand to a daily provision of $120 billion. So that's $120 billion the Federal Reserve is going to inject into the overnight lending market, into the repo markets, to plug this hole. Again, remember, this is a game of musical chairs. The moment one bank sits down, or the moment the music ends, one bank declares bankruptcy. That's how this shit works, guys. And guess what? Guess what kicked off the financial crisis of 2008, 2009? Bank calling in that bankruptcy. And in fact, we have this juxtaposed situation where this time banks just blatantly approach the Fed for a bailout. Last time they were like, I'm not sure. It's already happened. This is the bailout. This is the QE. Quantitative easing has been ramped right back up. 120 billion reasons to buy Bitcoin, guys. So again, this increase to 120 billion is up from the previous level that was set by the Fed at $75 billion as our central bank continues to try to calibrate and find the right amount of funding needed to keep these markets operating properly and to hold, primarily this is the goal, to hold the overnight funds rate, the interest rate on money loaned, at its target range. Now, the New York Fed announced the growing measure yesterday, and they didn't elaborate on specific reasons. The reason is because we don't got this. But it did come after Tuesday's particular injection of almost $100 billion into the lending markets. Now, Mike Schumacher, who is global head of rate strategy at Wells Fargo Securities, said, quote, "It's just more evidence the Fed will not back off as year end gets closer. The Fed wants to take out more insurance. You had a repo pickup last week. That might not have gone over too well." Now, this drama, obviously, for those of you who are unfamiliar with our reporting or with the situation, this drama started back in September with an overnight cash crunch in the repurchase markets, in the lending markets, which saw the rate of interest spike as high as 10% from the normal 2% interest rate. And as a result of this, the Fed stepped in with a big injection of liquidity to provide relief to the banks and bring the overnight rate back into check. Now, since then, the Fed has announced an ongoing facility program suggesting that this backstop is far from temporary. In addition to the repo increase, repo operations to term are rising to $45 billion from $35 billion. In addition to those two facilities, the Fed recently announced a permanent operation that will target an initial $60 billion a month bond repurchasing strategy, which resembles, by the way, the 3 rounds of quantitative easing deployed during and after the 08-09 financial crisis. Now, however, the Fed does claim that this latest program is nothing like the quantitative easing of 2008, which was about juicing the economy. Instead, this new quantitative easing aims to address the proper amount of bank reserves in the system. I don't know. You guys tell me. What do you guys think about this? This is the most troubling piece of information that we have coming out of the American economy right now. And again, 120 billion reasons to own some Bitcoin and be hedged up against this situation. But historically, the Fed isn't very good at fixing this problem. Now, something that we didn't get a chance to cover yesterday is record setting on Bakkt, guys. We talked about Bakkt, old Big Daddy Bakkt coming in. Now, Bitcoin did dump, obviously, over $500 in mere minutes yesterday morning. And institutional investment would seem, because of this, has been awakened. Now, Bakkt's trading volume for its Bitcoin monthly futures almost hit 350 BTC yesterday, with the indicator possibly going on to exceed the $1,000 Bitcoin threshold by the end of the day. So record volume set on Bakkt during the big dump to the downside. Now, while it is obviously difficult to explain precisely why Bitcoin crashed yesterday morning, there were more sellers than buyers, it would appear institutional investors have taken the opportunity to invest in Bitcoin at the current discount price. Now, nearly 2 hours before the crash, the Bakkt volume bot was showing the trading volume was only around 8 BTC at that time, with a projected end-of-day total volume of 58 Bitcoin in total. That's all that's being traded on Bakkt. However, that flash crash sparked investor interest so much that the Bakkt's volume suddenly spiked wildly beyond daily expectation. As of 12:30 p.m. Eastern Standard Time yesterday, daily volume stood at 370 Bitcoin and the daily projected volume at 1,089 Bitcoin. And that sets a daily record for Bakkt volume already in the day, since the previous daily all-time high was 224 Bitcoin, which was reached on October 9th. Now, trading volume jumped on other exchanges as well, naturally. Along with it came massive liquidations, with the bulls getting burned to the tune of about $200 million over at BitMexico alone. So, again, it's never a good thing. It's never a nice thing to be trapped in a losing position. And again, my heart goes out to anybody that was trapped in a losing position yesterday, on the big movement to the downside. Relatively, it's not the biggest move we've seen from Bitcoin. We just saw a much more significant movement not too long ago, which was the bearish initiation of these trends to the downside for Bitcoin. And it's something that we, unfortunately, we do have to deal with. But again, the way that we approach trading and just my overall opinions on everything is that as long as you're breathing, we can pick ourselves up, dust back off, and you can get those winning trades, right? And again, being in a community like Cracking Cryptocurrency, hopping in the Discord, having somebody to help talk to you about your position, help keep you on the right track, I think is absolutely invaluable. And I know that, again, my friends are what's allowed me to grow to the level that I'm at as a trader. They keep me in check, they challenge me, they push me, and I think that's absolutely, absolutely essential. Now, on that same topic of Bakkt, I want to talk about the Bitcoin options contract platform that is going to be launched through Bakkt. Now today, Bakkt announced that they're going to be launching the, quote, first regulated options contract for Bitcoin futures. So move aside, Deribit. Here comes a big daddy Bakkt. And this joins other futures contract platforms. Obviously, the infamous physically settled futures, which just launched last month. Now, CEO Kelly Loeffler said in a Medium post that the contracts were built in response to customer feedback and that ICE Futures US self-certified the contract through the US CFTC already. So good to go. She said, quote, "We are committed to bringing trust and utility to digital assets, and the options contract is an example of the many products we're developing for regulated markets. The Bakkt Bitcoin options contract will be based on the benchmark Bakkt monthly Bitcoin futures contract and represents another important step in developing this asset class for institutional investors, their customers, and investors." And let me tell you something here, guys. I don't know if you're aware of this, but options are the most popular form of trading in the United States for pretty much all over the place. It is a very, I'm not a big options guy. It is not my area of expertise. It is, something that I'm probably better than your average duck at. I've traded options before. It's just not really my thing. I don't really enjoy it. But again, options are wildly popular in the United States. Why? Because of the financial crisis and the regulation, the reactionary regulation that came out of that, which basically reduced the amount of leverage that American traders can trade with to a ridiculous level, which allows us to have no yield. And it also made CFDs illegal, which was the ability to get very high yield returns, because when you're trading CFDs, the ability to short sell and then jack up the leverage, which gives a lot of investors the opportunity to produce large profits, went away. And so now when we're looking to only be able to trade the underlying asset stocks in America, that significantly reduced the availability of liquidity, because now we're not just trading contracts for difference offered by a broker. We actually, if we want to short sell a stock, have to actually source the stock to short, which is a pain in the ass, at least for some non-popular shorts. And this maybe not an issue for a regular retail investor. The issues that a retail investor are going to have to deal with is access to margin. So that's going to be significantly reduced for you. For an institutional investor, it's access to liquidity. It's access to liquidity. So anyways, I'm pretty happy to see that Bakkt to be launching these options contracts. I think this is going to offer a lot of ability. I think this is going to be a highly demanded product. Obviously, this is not going to be available to your retail trader. This is more in the realm of institutional trader. But again, your larger capital traders can trade over there as well. I do have some people in the group that only trade on the CME futures, for example. But now this expansion to Bakkt's offerings does mean that customers will have the choice of options contracts settled with cash, meaning customers receive the fiat equivalent to the contract's value at expiration, or physically, meaning they do actually receive the underlying Bitcoin. So we do see a little bit of a juxtaposition, a move away from purely physically settled Bitcoin futures contracts, and the options contracts do have the ability to be settled in cash. So unfortunately, we are opening ourselves to the same form of manipulation that the CME futures allow, but again, options are slightly different because the downside exposure to an investor is unlimited while the upside is limited. So now, it is important to note that Bakkt is joining the Chicago Mercantile Exchange, the CME, in launching options. The CME did announce that they would launch Bitcoin options on top of its futures contracts in the first quarter of 2020. So we're going to have two institutional grade options contracts for Bitcoin within the next 6 months. Now, in addition to its options contracts, Bakkt is also launching a market maker program to boost the trading of its monthly contract, according to a letter addressed to the CFTC. So, if you're a market maker, hit them up. They're hiring. Anyways, guys. Okay, that's about all I want to cover today for news. Let's go ahead and hop back over into the live scene. Let me know. Listen, anything I said today, guys, I'd really love to hear your thoughts and opinions. Leave them in the comment section down below or pop them in the live chat if you're watching live. And I'd love to have a conversation with you about it. So let's hop back into the live scene. And I'm a little thirsty, so I'm going to drink some of this water. Okay. And we're going to hop back over into the live scene. Get Bitcoin pulled up over here. And let's go and review some of the chat activity. Phil, good to see you over there on Twitch, my good friend. Justin, need a metal riff button when he says time to look at FX and precious metals. That would be good. Speaking of which, let's, since we're going to be just kind of chilling for a while here. Turn the tunes on for you guys. And Angel Tech 72 asked for some TA on XRP. So we will look at XRP. Robert Hemming says, essentially in part, like, how do I know that your course is not a scam? There's probably very little data. I guess what's the good answer to that? I mean, the good answer is, hop in the Discord, man. You can see every single person that's in the premium trading group. You can ask them what their experience with the course is. You can stick around for a while and watch the shows. You can review everything that we've done. Yeah. Let's see here. I wanted to look at XRP. JP Morgan is in horrible shape. The others can't be much better. Jack says the crisis starts when music stops and the banks put the walls up, freeze their interbank activity, and the system halts. The Fed has to step in to front enough money to satisfy them. That is correct, man. What was the date for options at Bakkt? December 9th. Nitin says, I mentioned Ethereum USD may move back by $15. Would be a possible entry for that. Let me look at XRP here for Angel Tech, and we'll go take another look at ETHUSD. Okay, XRP. So we're going to start off with XRP USD. Let's actually go look at it on BitMEX. Okay, so looking at XRP USD on BitMEX, again, we're in fairly bullish territory. We don't have a continuation signal right now. Yesterday obviously would have represented a fairly attractive entry on some of these low wicks. Did we have any kind of basically a stab right back down into this level of support? But then you would have been playing right line, wrong line. We're looking for pronounced trends, right? We're looking for pronounced trends. You know, XRP has been fairly choppy, but we are in bullish territory right now, so I'd be looking for continuation on XRP. I don't see it right now. But we did not broach the baseline, so we can look for some continuation signals. Might be a day or so before we get there. Now, on the lower time frames, we did have a long signal right here at about noon today, Universal Coordinated Time. Could have entered right here around, what was the close of this candle? 27 cents, 0.449. And you probably wouldn't be up too high if I was to look at this price pattern. This does look a little bit like a bull flag. Again, you know, it seems like demand is steadily creeping up while we have a consistent level of resistance. So I actually wouldn't be surprised to see XRP USD make a movement to the upside here. So let's go to Ethereum USD and look at that potential entry for Nitin. I mean, obviously the best entry. So on the daily, we're not going to be able to catch something like that because we're going to need, you know, on the daily, we're trying to catch sustained trend flips. So either catch the momentum signal on the hourly, or ideally, you'd be trying to buy anywhere below 158. But just make sure that you utilize a stop loss. I would recommend a stop loss based off the ATR. In this case, which it sucks for the hourly, but in this case, if I was going to take a reversal long off of this area, I'd be looking to have my stop loss somewhere around 146.20. But I would not want to let my stop loss, I wouldn't want to let price hit my stop loss. Again, as with all things, I would be looking for exiting. So, I mean, this is just one of those sticky situations, and these are trades that I don't like. I don't like trading like this because, you know, you're trying to call tops and bottoms, man. I think it's better to take the momentum signal on the hourly rather than try and buy the bottom, because you always come into areas of risk management. Almost all losing trades that I know that people try to make is when they try to buy bottoms or sell tops. That's the maximum amount of pain for people. It's the worst place to enter in. I mean, if you get it right, great. But I mean, honestly, all of you watching right now, look into your heart and ask yourself, how many times have you tried to buy the bottom and it worked out just swell for you? How many times have you tried to sell the top and you didn't want to throw yourself off a bridge the next day? Stop trading like that. Stop trading like that. But yeah, let's see here. We already talked about, we pretty much got a break-even signal from Ethereum today. Entry right here. I doubt we would have hit TP1. Very low volatility, so it's possible. Let's actually take a closer look. Yeah, we actually would hit TP1 on this trade. So small profit, but a win. And we'd be out right now at break even. And we're having a little bit of a pullback on Ethereum right now. So, I mean, again, I think that it's likely that we get that $15 bounce, especially if Bitcoin continues to outperform. I don't think that ETHUSD is going to go very far down. So, you know, potentially if you're a little bit riskier, I mean, you could enter right around now, man, if you're looking for that $15 bounce back. And you'd be looking to resell around 175, 177. But as with all things, caution you, low risk, not the optimum opportunity for trading. but a possibility. So again, really the better setup is to allow it to bounce back, take no action, and then reshort with higher position size at 175, 177. Trade in the dominant direction. Theta for Ian Cortor. Let's check it out, man. You jumped in a Theta USDT long yesterday. Do I think that was a good trade? Yeah, I mean, it hasn't, exploded to the upside for you. The entry was right here on the 22nd. That was the proper entry on the 22nd. We would be doing pretty well right now, but we'd probably be out of that trade because it's likely that we would hit our break-even stop loss after taking some profit on this candle. These always concern me. This obviously altcoins are really, really wicky. But when I see candles like this, I mean, this is a candlestick pattern. This is a hanging man. I take it all back. Did that just happen? Did that just Did you just see that? Did you just... Oh, bro, that just happened, man. Did you have a limit order, man? If so, you just did pretty good. Oh, man. Sorry. Sitting here talking and somebody's like, bloop, market buy. I got chunked into harder than me at the pizza ranch. Yeah, there you go. Just slapped 3 TPs. Slow clap, brother. All right, cool. Hey. Not necessary for the analysis anymore, huh? We're good. Make sure to move that stop loss to break even. All right, good stuff, man. You could have even caught that on the 1 second chart. It's like, boop. That is a 1 second chart. This is every tick on here is 1 second. What was I saying about Wiki? Yeah. Okay. So assuming that didn't happen, but it did. So. Okay, now what do I want to think now that we've wicked the upside? Really nothing. I mean, it's fairly random. What I was going to say, so here's what I was going to say, and then maybe this will make sense in context. Again, the fact that this is a hanging man candle doesn't really mean a whole lot to me. In altcoins, what that kind of tends to mean, though, and in markets in general, is that somebody is testing the depth of the order book with a big market sell, seeing if they can get price to move in that direction. And if they can, then they're going to unload. And move the market down. And if they can't, they're going to hold on, because basically this is like somebody who has a large position, and they're testing the depth of the order book to see if they can take price higher, to see if they can incentivize buyers or other whales that they can trade against, or they're looking to unload their bag and they're just kind of testing the depth of the book to see if the book's strong or not. Because again, cryptocurrency is fairly thin books, so you can really test them. I mean, it takes some capital to push price down, but a big market seller, a big market buy can really make things kick off. Now, from a purely technical, from a daily PTP perspective, again, the entry was over here on the 22nd of October 2019, and you would have just hit take profit 3 on that wick, take profit 2 as well, actually. So you would be out of this trade. Or potentially you were letting this thing ride. If we close up here around... We close up here above like 10 cents, 0.188, so 0.10188, you could set a trailing stop loss. But other than that, I'd just be pretty happy that just happened right now, man. FFLTV, a fat finger live, man. Somebody just did that for real. Good stuff. Ken says, I've got about 85% of my fiat and physical silver. Government wants gold, but silver, not silver, but they could issue an order against silver as well. Plus about 5 BSV or so. We still love you though. Plus some hard commodities like freeze-dried goods, just in case. And guns and lead. That's about it. Good to hear, Ian, man. Hey, sometimes when you trade in the right direction, good things happen, man. What I do right now, if you still have some of your position open, you said you entered yesterday. This is a fairly tight spread, but again, you just did what well. You don't want to make your trade a potential loser. Set that stop loss at break even, man, and let that thing ride. And we'll see what happens. Most likely, it's going to hit your stop loss. It's pretty volatile, but just let it ride. Once you've, had taken advantage of a wick like that, you don't really want to let price come back down. So. Good trade, man. Congrats. And I'm going to clip that out. That was a pretty funny scene. All right, guys. I think that's a good place to call it, right? Let's wind her down, guys. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise, lead analyst and senior mentor around these parts. If you guys enjoyed the stream, make sure to hit that subscribe button if you're watching us on YouTube, and the bell because we are here live every single day. Highly appreciate the support. If you have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comment section down below, where I will do my best to get back to you within a reasonable amount of time. On your way down to that comment section, you're also going to find links to everything that you could ever possibly need in this world, whether you need a VPN or an exchange to trade on, or you would like to buy some merch, guys, because it's not just me that rocks this wear. Anyways, guys, it's been a fantastic show. Thank you guys so much for joining me with your time. We'll be back tomorrow, same crypto network, same crypto time, to break down the markets. I want you guys all to trade safely. All trade safely, guys. Hop in the Discord if you have not already so we can carry the conversation on after the show. And I'll see you guys back here tomorrow at noon p.m. Central Daylight Time to crack some cryptocurrency. Trade safely, guys.